Good afternoon, everyone. Gabe Velazquez here with you, transparenttradesolutions.com on a Tuesday. Hot wage numbers. All the ultra sensitivity to any kind of inflationary numbers have impacted the market. Let's get right into the charts. Again, subscribe to the newsletter. Give me some thumbs up, some commentary. I want to start right there with the charts. Obviously, don't waste any time here. So the Nasdaq did in fact come off of this kind of uglier supply zone, we would call it, right? So we kind of struggled to get through that level here. I mean, it structurally it was kind of not great, but it did come off, and it's sitting right at the a level here, and we're right as I'm doing this, we're getting a lift because of the Amazon and whatever. So Amazon probably getting a little bit of a move here. If it's negative, I think we have a negative reaction from Amazon, which it's all over the map, really. So we'll see what happens tomorrow. We got a Fed meeting tomorrow also. Next levels really aren't until we get up here. And now if the market does sell off, there really aren't any levels to look at on a demand side until you go much lower in price in the NASDAQ, all the way down to like 17K. So that may be in the cards here, especially if we get another kind of hawkish tone from the Fed. That's going to be a massive level. That's a demand zone here at 17K. That may be where the Nasdaq is headed. The S&P didn't quite get up to. There was a level here that we've been looking at here. This 5150. There's kind of a level up here that I've been pointing to, and I wrote about over the weekend. We never got up there. 5157 never got up there. It was interesting because the SPY did get to the exact same level at 510 and sold off. And now we're kind of just, after today, we're kind of in no man's land as well, down to, and there really aren't a lot of levels as well on the S&P until you get much lower levels as well. The next level on the S&P is going to be way down about, maybe 48.25 or so is the next level. What did also work was the, some of these levels on the YM, and that's also kind of just hovering around this. It's going to be interesting tomorrow if this is just another pullback in the context of the major move from October, or are we going to just continue further to the downside and maybe do a 10% correction, which we haven't had in about 6-7 months now. Also, the Russell, similar, not getting a ton of follow through. Rates were the culprit today. You can see rates shooting right up again with the hot wage numbers. Dollar also moving higher, as you might expect. The correlation between rates and the dollar continues. We'll see if we can break above 106.35. We did have that intervention on the yen, but that was just short-lived. Looks like we may be trying to hit down to the lows. It'd be interesting if we could put in a double bottom down in here on the yen, or there's just, yen goes all the way back to 160, which takes the yen down to about 60 here. That would be the 89 low or something way back in the day. So everything else really, if you can imagine the higher dollars pressuring metals, which after that huge run up, everybody got all excited about gold. That looks like it's breaking down. I'm not looking to buy gold until it gets down maybe to 2200. I think it's got some room all the way to the downside. Copper did hit the daily supply. It is pulling back. Got some demand here on copper. Oil really not doing much of anything, just chopping around. And similar with nat gas. Nat gas just kind of also just kind of meandering about here. I'm sorry, not that's wheat's holding 6, but nat gas is basically just range trading big time here. And then the grains, again, wheat still looks okay. Just mentioning wheat looks like we're holding 6 a bushel, and let's see if that holds and then keeps going higher as well on that. So that kind of sums it up. So we've got all, Amazon reaction. I'm looking over my screen here. It's been all over the place here, down a little bit. Apple is getting hit after hours. I'm not sure what that's all about. That's probably what took the market down for the last leg. I'm not sure what came out with Apple, but if you're watching Apple in your actually, let's take a look here since we're on this call right now on this. Yeah, so something right at the very end, I'm sure something went. You can see Apple got hit. Their earnings are not till Thursday, so I'm not sure what's going on here. And I think that's what created that last leg in the S&P with this move in Apple. And Apple still got to hold 163 earnings after on Thursday afternoon, and then the Fed tomorrow, and then non-farm payrolls Friday morning. So, market could be down another 100 easy between now and Friday, or up 100. That's kind of the environment we're in right now. So we'll see what happens. Again, keep your size small. Don't chase any moves. Because again, any kind of moves, as you saw, are just not getting a ton of follow through. Even the shorts right now, right? If you chase the shorts in the last couple of days, the thing rallied pretty sharply. So you got to be very careful. Pick your spots, wait for the rallies to short against some high quality levels and so forth. Okay. All right. Have a great afternoon, and we'll see you on Friday. Take care.